Okay, we are recording.
Thank you so much for having me here, David and Anka. It's such a pleasure to be here. And my presentation is going to be very fast moving, and it's going to be very fast moving. So please try to pay attention, otherwise I might lose you. It's called From Confusion to Clarity, a 3-step playbook to remove uncertainty and achieve consistent profits in your trading. But first, some housekeeping. Thank you so much for attending this event, for being here. And everybody's busy these days. There's just so much going on. So thank you for being here. And please, please pay attention. Here's the disclaimer. So this is me in Dubai in the fall, and this is my book that still seems to be quite popular. It's really everything that I put in everything into this book from my 35 years of trading experience. So I just like to show it every time I speak because I'm quite proud of it. And I don't know if I have another book in me, but this is my book. So what you're going to learn during this masterclass is really 3 things. It's called the 3. It's how to anticipate market direction by reading the market map. That's the first step. And then the second is a strategy. I'm going to show you the 4 lenses, how to locate and trade with confidence, high probability setups. And then the third is how to trade these setups for maximum profits, risk management, because that's really important. Risk and trade management, that's really very, very important as part of your overall trading plan. And why is this important for you to know? The market is getting complex. It's getting harder to make money. And when I put this presentation together in the, I guess, November, December, January kind of thing, yeah, we haven't had it was really difficult, and there weren't a whole lot of major trends going on. And of course, things have changed now. There's some clearer things happening, and therefore we're seeing trend moves, maybe not in the direction that you'd like to see them go, but there's a lot going on. And emotions are the Achilles heel for traders, so you need a system that removes the emotions. And speaking of fear, this is a fear-driven market right now. So you need to filter out the bad trades, and if you're planning to adopt automation, you need a foundation first. It's important because your capital is likely limited. If you blow up your account, you might not get a second chance. So I'm here to show you really what I do. And a little confession, I've been trading for more than 30 years. You may think I have an advantage over most traders, and to a certain extent, you're right. In case you don't know me well, I traded currencies for 14 years for JP Morgan in New York and Toronto. I'm living in Toronto right now. I settled here, got married, have a family. I was the lead trader for the British pound for 6 years in New York. I traded it from 240 back to 105, back to 140 profitably. And I've been trading for 20 plus years as an independent / retail trader, just like you. I've traded commodity futures and Forex. And so if you're starting to think, oh, trading must be easy for Jody, but not for me, well, I also hit a wall after leaving the bank. On the one hand, I was confident because I had all this bank experience behind me. But on the other hand, I also had doubts, uncertainty, just like you, just like anybody else. I didn't have access to bank support and the flow of information once I left the bank. And then back then, I had to pay $2,500 a month in data and chart fees, when now that is free. Today, it's free, but I paid $2,500 a month in order to trade. And I traded futures. There was no established Forex retail market yet. So what did I do? I thought if I was successful with only a few tools at the bank, why couldn't I be successful now? So I went back to basics, used the strengths I developed at the bank, and I added more competencies. That's right. I invested in training, conferences, events, masterminds, and I learned from the best. I really did. I made an investment in my independent trader education because I felt that it was a different education than I learned from the bank. I added to that. And then I started to trade profitably with the help of a system I developed and refined over the years. That includes my chosen analysis technique of Elliott wave analysis. Then I founded FX Traders Edge back in 2006, and I'm still here after 30 plus years trading. And though it wasn't easy, the journey is worth every minute, and so can it be for you. What process did I follow to remove any hint of doubt, uncertainty, and to overcome starting the month $2,500 down to finally become an established and profitable retail trader? Well, that's what I'm here to show you today, the 3-step playbook to achieve consistent profits in your trading. So the first step is the analysis, the second step is the strategy, and the third step is trade management and risk management. With the analysis, I'm going to show you the market map that I follow day in and day out. With the strategy, I'm going to teach you a 4 lenses checklist. And then we're going to talk about trade management and optimal risk reward. So let's get started with analysis, looking at the market map for the Wavy Tunnel Pro. The first step in achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. In our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. This is the market map. On the left, we have the uptrend, and on the right, we have the downtrend. So I don't know if you can see my mouse, I hope you can. We start at point 0, which is the start of a new trend. The market moves up for a wave 1. It retraces for a wave 2. It moves up for a wave 3. The wave 3 is usually when most traders latch on to trends. This is going to be the steepest move in any trend move. And then we have the wave 4 correction. And then we have the end of the move in a wave 5, where the market reverses, and then we do a correction, an ABC correction. In Elliott wave analysis, the trend moves are labeled in numbers, 1, 2, 3, 4, 5. The corrections are labeled in letters ABC. So moving to the right, we see that the wave 2 correction, the wave 4 correction, the wave B correction, these they can either be sideways moves or they can be steep corrections. It really depends on the type of pattern that it is. And in Elliott wave analysis, it can be a complex correction. The important thing for you to know is when we are trading a downtrend, just put your channel lines around the downtrend, because most likely, until this trend is complete, we will stay within those channel lines. And once we break through those channel lines, that's when we can anticipate a correction of some magnitude, of some duration. So this is the 8-wave Elliott wave cycle. This is the market map that I have imprinted in my brain. It is internal. It's just a part of me now. And when I look at markets, I'm automatically thinking, are we in trend? Are we in correction? Where are we? And I don't need to have an exact wave count on it. I can just look at the patterns and just see if it's a reasonable pattern to trade. But that takes time to develop. So this is our system that we use, and I will tell you a little bit more about it at the end. But this is the Wavy Tunnel system. Now look at the market map on the left and look at the Wavy Tunnel indicators on the right. You can actually see how the 8-wave cycle is mapped out with these indicators. And this is a very simple, simple set of indicators to use. And it's just, I just find that it's brilliant. It's one that I've used for the last 10 years. I don't need to change it. And we're learning more and more about it as the months and years go on. And it really captures the essence of the market cycles. You can see the wave 3. You can see price moving away from the moving averages and then coming back to equilibrium in a sense when the markets come back to the averages. And these are elite wave moving averages. That's why the system is just so beautiful. We'll talk more about that. So the trades that you can look for, you can look to buy on any retracement for the next move up. So trade number 1 is to buy the wave 3. And where are you going to leave your stop? Below 0.0 or below the end of this correction once we take out the previous market high, price high. And then trade number 2 is to buy for the wave 5, leaving a stop below wave 4. And we have some ways of determining when the end of the wave 4 is. And this is actually I really like this trade, the wave 5 trade. Trade number 3 is to sell the wave A or to sell the wave C, which comes right back down into the tunnel. I'm going to show you examples. So these are trades that I like to trade. And there's a 4th trade as well, which is to trade along the curve for the wave 3 move. Like this is where you can't go wrong when the trend is very, very steep. You do not want to look for a reversal point until you have it. Like you don't want to buck the trend while it's in progress. So that's the analysis part. That's the market map. The second is the strategy. And I'm going to show you a 4 lenses checklist for pulling the trigger. And this is my favorite Wavy Tunnel Pro setup. So you have to understand when you're making a trading decision, what to look at. After a good analysis, strategy is used to identify the exact entry point, the stop loss level, where do you think where are you going to be wrong, and the profit target to know when to trade and when to stay out of the market. For me, if I don't set a profit target, if I don't do the analysis and look for a profit target, since I'm not a day trader, I'm a swing trader, and I don't set a stop loss level, then when the market goes my way, what happens? I don't take my profits, and then I can watch it go all the way, against me, and I'm still holding the position. So that's why for me, it's really important to set profit targets, and we can do that easily enough by looking at the higher time frames. I think I'll have time to show you that as well. And removing the emotions is key. That's why I like to use a strategy. And there are different types of strategies. When I first started trading, I was using discretionary trading. I was an interbank trader. Read the news, do some analysis, decide buy, sell. I had the price action telling me what to do, though, because I had banks calling me all day long. I was really the only female British pound trader amongst the major banks at the time. And when somebody had an axe to grind, I would be, one of the first. I worked for JP Morgan, and one of the first banks that they would call to unload or buy, sell. So I really was guided by the price action. But we did have an elite wave analyst on the desk who tried to guide us and provided us with key levels every single morning and what he felt the important trends were. So I kept that in the back of my mind as I was trading. I made these decisions. And then manual trading system is really what you're familiar with. And if you've moved into semi-automated and automated, that's great. The only thing that I have to say about that is understand the system, understand what's behind it. And that's what we're working on right now. This is where we are headed. We do have an automated trading system for one of our strategies. So let's talk about the 4 lenses checklist for pulling the trigger. We're going to look at this, the blue box in here. This is the point T, end of trend, and 4 simple points. Look for a reversal candlestick pattern up here. look for divergence, look for the trend line break. Remember I said that the trends fall within channel lines, and then look for a 1, 2, 3 reversal. Let's discuss it. Your starting point is here. You have a reversal candlestick pattern. You have a long tail. Whenever you have a long tail, it means that the sellers have lost control. The buyers have come into the market. They've pushed the market up. There's no more selling interest. That's the reversal candlestick pattern. Divergence, what I use is I use the awesome oscillator, and this is on this time frame we call this bar divergence, but divergence is when price makes a new low and the awesome oscillator, or any oscillator for that matter, makes a higher low. That means that the market is running out of steam. And you really do want to look for divergence at the end of moves. It just gives you another confirmation. The third is a trend line break. Draw your trend lines. Draw your channel lines. Just draw them, because once price breaks through the channel line or the downtrend line and you have a trend line break, that typically starts a new trend. What's the definition of a trend? A downtrend is lower lows and lower highs. So as soon as we start to have higher highs and higher lows, that's the definition of a new trend in the opposite direction, in this case an uptrend. But we really only know that from the 1, 2, 3 reversal. So the 1, 2, 3 reversal is where we label point 1 as the lowest point on the chart, and then the market moves up, we label that point 2. The market moves down, we label that point 3. And once we take out the point 2 high, that creates a trend in the new direction, an uptrend, because then we have higher highs and higher lows. This is a confirmed entry, okay? A buy at 106.68. That's your entry. We've done our analysis. We have our candlestick pattern. We have our divergence. We have our trend line break. The 1, 2, 3 reversal, that can be our trigger, how we enter the trade, how we get into the trade. Now we have alerts, and it's called our Trade with Confidence videos. And our alert came out on September 3rd at 106.11. Okay, so it came out even earlier than this. But let's just say that we buy using this 4-point system. We buy at 106.68. I like taking confirmed moves. I really like the 1, 2, 3 reversal, because then I know that most likely we're not going to make a new low. And if we do make a new low, so be it. But I really like the 1, 2, 3 reversal, because it weeds out early entries, right, if we are going to make a new low. I just follow very specific criteria in my 4 lenses strategy to evaluate if I want to trade a specific setup. I remove subjectivity with the specific criteria. And listen to this. The greater the objectivity, the fewer the emotions. The greater the objectivity, the fewer the emotions. The Wavy Tunnel Pro strategy has what I've always been looking for, namely clear, defined, understandable, and consistent rules that are not complicated to learn. Even people who have never had anything to do with the stock market can learn these strategies quickly. That's Christian, one of our students. Now, I'm teaching you the 4 lenses checklist for pulling the trigger. That is another strategy. And many of you have your own strategies. If it works for you, that's terrific. Then it works for you. And if you have not introduced some kind of analysis into your system, I call this whole thing a system, looking at the analysis, the strategy, and then the trade management for optimal risk reward for achieving consistent profits, then you can introduce other elements like the market map that you're learning from me today. So now let's move into trade management. We learned how to trigger the trade through the 4 lenses checklist for pulling the trigger. Now let's look at trade management. This is the 3rd step in my playbook. The goal is to apply optimal risk and money management in order to maximize profits. This step can tip the balance between being profitable or not. For example, by trading only setups with a minimum risk-reward ratio that you set in advance, like 1.5, you can refine your analysis and improve your performance stats immensely. You need a smaller win-loss ratio then. Okay, so yeah, there's a lot to say about this. So let's look at some examples. The trade plan. Buy on the 1, 2, 3 reversal and set a stop. So this was the 106.68. We set the stop at 105.74. So our trade plan so far is to buy at 0.2, 106.68, leaving a stop below 0.3 at 105.74, which is 94 pips. Now, one of the ways that I use Fibonacci a lot on the previous swing move. Once the market starts a new direction, in this case, an uptrend, or maybe it's a correction of the previous swing move down, you run your Fibonacci tool from the previous swing high to the previous swing low, and then it comes up with the traditional Fibonacci retracement levels, 38.2, 50%, and 61.8%. So with this alone, you can set profit targets. You can set a profit target at 38.2, at 50%, or at 61.8%. So in this case, we set the profit target, the initial one at 50%, at 108.43. I guess that's over here. And then the next one at the 61.8, 109.36. Now, if it doesn't quite make it, like if your trading platform doesn't quite trigger you on the 50%, and if it comes very close, since this is a daily chart, you can certainly get out, before it hits that level. But this is just so that you can anticipate where the market is going. And the same thing with the 61.8. It wicked up there, but again, if you feel like over here, if we went close and you want to exit close to 61.8, you can do that. You don't have to wait, until it actually triggers, because it might not actually trigger, right? In this case, it does, but it might not. So these are your two profit targets. Now, there are a few ways to trade this, okay? One way, let's say we take our profits at 50% fib level for trade number 1. So let's say we take all of our profits at the 50% level, but you think it's going to go higher still, and you want to take another trade. So you can after an Elliott wave correction, a retracement, a 3-wave correction, you can re-enter and take trade number 2. So the 2 ways to trade it. Take half of your profits at 50%, take the other half at 61.8%, so you still have the same position, or you take 100% over here at the end of this swing move at 50%, wait for a correction, go in again, and then take your profits at 61.8. It's not always easy to do B. That's what I find. Like, you really have to train your brain. You have to say to yourself, I'm going to follow this market, and then I'm going to enter again. Not many people can do that. You have to train your brain to do that. For me, it's easier to do A, to just set 2 profit targets or 3 profit targets. A third at 38.2, a third at 50%, and a third at 61.8. Only because I'm not watching the markets all day long or every day all day long. I'm just not. And I'll check, but for me, my brain works better if I plan my trade and then I just do something like this. But if you're more active than I am, then you might want to do something like this. Now, let me show you the difference in the P&L. So let's say we take our profits at 50% for trade number 1. And we take 2 standard lots. So or versus 2 mini lots. I mean, it really depends on what your account size is. So I've just taken 2 trades, standard lots and mini lots. A standard lot is a $100,000 lot. You do not need to have $100,000 in your account to take that. And then a mini lot is a $10,000 lot. You do not need to have the full $10,000 because of leverage in your account to take that. So for trade number 1, if you enter at 106.68, leave your stop at 105.74, and you take your first profit at the 50% at 108.43, your risk reward is 1.86. That means that your profit is greater than the 94 pips that your stop loss is by 1.86, a factor of 1.86. And this is what you would make on that move. For trade number 2, you would re-enter, you would buy again, and your risk reward for trade number 2 is 2.74. But look at the holds. For the first trade, you have a 9-day hold. For the second trade, you have a 23-day hold. That's a little bit long. So, you know, it's just, you have to gauge the way your brain works and what you feel comfortable with. You might have been out of this position before the 23-day hold, so you could look at other opportunities for your equity. Like you have a given amount of equity, that's what you might do. It really, there are lots of decisions to make as a trader. So if you break it up into 2 trades, this would be your profit. $713 on 2 mini lots, or $7,133 on 2 standard lots. But now let me show you how easy it is to spot the profit levels using the Wavy Tunnel Pro. You can use the Fibonacci tool. I always use the Fibonacci tool, but I also use the Wavy Tunnel Pro setup. I mean, this is one of our trades. It's called the fill the gap trade. And this would be the first profit target right here, and then the second profit target right here to the 2 different moving averages that you see. And so had you taken the trade initially, your first profit target would be there. And then based on the way the market moves, the cycles, we do anticipate a move down below the wave again. That's what we anticipate in our training. We anticipate a move back down and then another move back up again. So the Wavy Tunnel setup really shows how easy it is to set profit targets just based on the moving averages. So let's go back to the numbers for a minute. There are many ways to manage the trade. I showed you one way, but the first way that I showed you, and we didn't elaborate on it, we're discussing it now, is to buy 2 positions and sell one at 50% and sell the second one at 61.8%. So you would make 175 pips on the first lot, 268 pips on the second lot, 443 pips in total. You're still taking the same 2 lots. This should be 2, not 1, okay? And yeah, this should be 2. There's a typo in here. And this is your total profit. So it's less than your total profit if you were to take 2 different trades, obviously, because you're capturing the first swing move and then you're capturing the second swing move. But this is the way my brain works well, and this is what I would likely do, okay? But there's another way to look at the P&L using money management. Let me explain. Let's forget about the dollar amount and profits for a moment, and let's look at percentages. Using proper money management, we're risking 2% per trade. Let's say we risk 2% per trade. Based on our profit target, the take profit 1 is 3.72%. Based on the move, the second is 5.48%. Take both trades, make 9.2%. So when we look at percentages, and really then all we have to do is we can customize it for our account size. Whatever our account size is, we risk 2% on our account, and these would be our profit-taking levels that would generate these percentages in returns. And here we go. this is the taking two different trades. So the first take profit would generate 3.72% for a 9-day hold, and the take profit 2 would generate 5.48% for a 23-day hold. It looks easy. It's not so easy to do. It looks simple. It's not so easy to do. Again, it takes practice in order to think this way. You need to train your brain to think this way. And this is, you know, how to really capture the profit. So it takes time. Adding lenses to trigger the trade, set stop, and add profit targets. So triggering the trade, we talked about our 4 steps. Looking at reversal candlestick patterns, looking for divergence, looking for a trend line break, and triggering with the 1, 2, 3 reversal pattern. So we also introduced the Wavy Tunnel Pro, setting targets using Fibonacci, and we can use the Wavy Tunnel Pro for setting targets as well. So here's some examples. This was a setup that was announced when oil was 54.48. It was a sell that we put out. And then if you look at the hourly chart, you can actually trade the move down on the hourly. This is sometimes it's easier to see the trend move on a smaller time frame. So this is a move straight down in oil on the daily chart. It doesn't tell us too much, but when we go down to the hourly, it tells us a lot because we have our beautiful wavy tunnel set up here, and we know that when price moves back to equilibrium, meaning back to the wave, that's when we want to get in for a sell. And this is called our breakout 3 sell. We have 6 different setups. Okay. So looking at the daily time frame and then moving down to the hourly, this is, and using the same, going through the same discussion that we did, our risk reward is 4.15. 4.15. So we set a 2% stop loss, and we have a risk reward of 4.15. And this is our profit that we generate based on a mini lot or a standard lot. Like it's similar to our mini lot and our standard lot on this move. So let's forget the dollar amount for a moment. With proper money management, if we're risking 2%, our profit is 8.3%. Okay, and how do we figure that out? Risk reward is 4.15. We multiply 2 times 4.15 to get our profit percent. That's based on the profit target that we set by looking at the higher time frame. And I didn't really show you how that works, but we can anticipate. We set our potential, our PPA, our potential profit area when we're doing our trade plan. And that's what we set in our trading platform. So this is the profit, 8.3%. That means that if you have a $1,000 account and you're risking $20, that's 2%, you can make $83 on that trade. If you have a $10,000 account and you risk $200, that's 2%, you can make $830. And if you have a $100,000 account risking 2,000, you make 8,300. You do not need to have a $100,000 account to risk $2,000 to trade a standard lot because there is leverage. You can have less than that to trade $100,000. You can have less than $1,000 to trade $1,000. You can have less than $10,000 to trade $10,000. I'm not big on over leveraging, so I'm not big on over leveraging, and I'm not going to say what is right for you, but just be aware that you don't want to over leverage. Okay, when you take, especially initially when you're first starting to trade, you need to really come up with high probability trades and be successful. So you want to develop confidence in your trading system and take smaller positions initially and trade on demo, of course. This was another trade sent out on the Aussie Swiss daily chart. Price was at 6,700. Stop was below the lows. Take profits 68.50. These profit targets are anticipated in advance because of our wavy tunnel setup. So 150 pips profit versus 50 pips stop loss, 3-to-1 risk reward ratio. And whenever we send out trades, we send out the trigger, the stop loss, and the profit targets. And then it's up to the trader as to how they trade it, right? Based on one standard lot position or one mini lot, it really doesn't matter. Risk reward is 3-to-1. The profit on one standard lot is $1,500. On one mini lot is $150. Okay. So forgetting about the money for a moment, looking just at the percentages, it's 2% risk, profit is 6%. How do we get that? Risk reward is 3-to-1. 3 times 2 is 6%. So trading $1,000, risking $20, you're making $60. Trading a mini lot, a $10,000 lot, you're risking $200, you're making $600. Trading a $100,000 lot, standard lot, you're risking $2,000, you're making $6,000. Here is another one, the euro, the hourly chart, the trade was sent out at this price, the stop was below the lows, and 2 profit targets were sent out, okay, based on Fibonacci. And the first trade generated 3-to-1, the second 5-to-1. Okay. Here's another trade sent out January 17th. The price was at 111.30, stop 111.45, and the 2 profit targets at these Fibonacci levels. Okay. We use a certain trade management approach. It's called the 3 profiteers. So it's based on the Fibonacci sequence. I haven't taught you about that, but it's just suffice it to say that it's an easy way to set profit targets. You can also set profit targets based on looking at the prior swing move and the Fibonacci retracement. So the first profit generated 30 pips with a 2-to-1 risk reward ratio. The second 50 pips with a 3.3-to-1. Another trade in the euro yen sent out in January. Again, same kind of idea. The important point here is to, no matter what strategy you use, if you use the 4-point strategy and you use the 1, 2, 3 reversal to trigger the trade, then you would trigger over here, right? 1, 2, 3 reversal, you would trigger at this point. And you would set your profit targets accordingly. Use your Fibonacci tool. Take the prior swing move. If you set your stop sell below this low, there's a good chance that the price isn't going to make a new high. And just do a little bit of analysis to figure out, okay, what is your 2% risk and what are your profit targets based on the using your Fibonacci tool of the prior against the prior swing move, and set some profit targets. Set 2 profit targets or 3 profit targets. For me, it's really important to set 2 or 3 profit targets because I used to not set any profit targets. I would just have a place in mind where I thought the market was going to go, and then I would plan to exit my whole position at one price. And that did me in because as a perfectionist, if the price moved my way and I took my profits too soon, then I would be kicking myself for not holding it longer. And if I didn't take my profits and it started to move against me, I would be kicking myself because I've given back so many profits. So I came up with something that worked for me called the 3 profit tiers, which is to take profits along the way, 3 different profit targets, and that way I could lock in profits along the way. I could move my stop as price moved my way, and I would be happy taking profits knowing that I don't know what the market is going to do. I don't know if it will come back and give up all of my profits. So therefore, I take profits along the way, and I'm happy. And it's that third profit target that if it's going to go, it's going to go, and I can maximize my profits that way on a third of the position. So that's why I started to take more than one profit target. Now, there's another school of thinking, which is, well, why don't you add on your positions? Like, why don't you just do add-ons along the way? Yeah, you can do that too. But like I said, this is the way I like to do it, because I'm not as aggressive as I once was. Now I have a lot going on in my life, and maybe 10 or 20 years ago, I might have, been sitting there watching the markets all day long, adding on my positions, and that this is the way I do it today. So here is another trade sent out in January. Yeah. So this is actually a really nice trade setup. Remember, we talked about the ABC. This is really, really nice, the ABC. So we waited until we broke below this level, and we watched it. We saw it up here, but we waited and left a stop sell down here and leaving profit targets, measuring this leg and then projecting down here 100% at a minimum. So the first profit target was hit. It was 50 pips profit, great. And then the second profit target was hit, 90 pips profit. I think we had, yeah. So yeah, we did two profit targets. So here's another wavy tunnel setup, and this is just recently. I just took this, on gold, because we've had a huge move in gold. So this is our breakout 4 trade. Once price moves down and the wave comes down to the tunnel, our breakout 4 trade for the wave 5, move. So once we take out this price high, price starts to move above the wave, we have other things to I guess, to show us that the price is ready to move higher for the wave 5. We do. The wavy tunnel setup shows us other things that I didn't discuss. But then you would go down to a smaller time frame. Go down to the 4-hour chart. Then when you see price taking off, you can get in really along this curve. You can get in anywhere, because this is your wave 3 move. Look at how the wave separates from the longer term moving average. So this is just showing 2 different time frames. I love looking at 2 different time frames. I will always look at the daily chart and then look at the 4-hour and maybe the 1-hour as well, to set up my trade and take the trade. So there are 6 wavy tunnel trades, 4 trend following trades, the breakout 1, the breakout 2, the breakout 3, the breakout 4, and 2 end of trend trades. So what I want to urge you to do, I mean, if you don't take my program, or if you have your own strategy, or you use the strategy that I taught you today, look at the market cycles, encapsulate the trends within channel lines. And the breakout 1 trade kicks off the trend. The breakout 2 trade is the wave 3 trade, getting in on the wave 2 correction. The breakout 3 trade is riding the wave 3. The breakout 4 trade is trading, getting in for the wave 5. So this is how we've named all of these trades. Ironically, it's very funny. When I initially named these trades, I did not name them as a wave 1, wave 2, wave 3, and wave 4. But years later, I realized that, oh my, this is really like the wave 1, the wave 2, the wave 3, and the wave 4. It wasn't intentional like that. I was just following the market cycles. But of course, naturally they follow the market cycles, and that would be wave 1, 2, 3, 4, and 5. Crazy. And then the two end of trend trades are the price of the wave and the fill the gap. So the price of the wave, this is when we have accelerated in a wave 5 move, and we come back to the averages, and then maybe we break down through the channel lines and we start our correction. So these trades, 6 trades, map out the market cycle that I taught you about today. Once you master the simple concepts of using the Wavy Tunnel Pro strategy combined with the bungees and the semaphores, you can make more accurate high probability trades each day, resulting in more profitable trades. David from England. Yes, I haven't even spoken to you about the bungees and semaphores. That's another part of our setup that we use. This is the manual trading system that has worked for me over the past 30 years and counting. But this is not about me. It's about you. And I believe that if you apply this playbook in your trading, you can become consistently profitable and achieve your trading goals, whatever they are. The Wavy Tunnel Pro Lite live classes will continue through May 2020. If you want to get a good sense of where the market is going every session, identify high probability setups, trade with the odds in your favor, trade these setups with the right position size, with the right risk reward ratio for maximum profits and lower risk, all in just a few months. If you want to remove uncertainty in trading, gain clarity about what to trade when and how much, and get massive confidence when you learn to identify the high probability setups, and finally achieve consistent profits in your trading, this is specifically for you, new traders and experienced traders alike. The Wavy Tunnel Pro Lite 2020 has 3 sections. One is the Elliott Waves market map. So you will spend time really understanding the market map and internalizing it and looking at examples and posting examples in our forum. Section 2 is all about drilling down on the 6 Wavy Tunnel setups as part of the overall Wavy Tunnel Pro strategy. And section 3 is on advanced Fibonacci, how we use Fibonacci with the Wavy Tunnel Pro strategy. And as you know, Fibonacci is the analysis used in Elliott Wave analysis as well. Section 2, the Wavy Tunnel Pro system is, we just said, you're going to learn 6 genuine high probability setups for maximum profits during every market condition. Learn how to trade the breakout trades, 4 of them in an uptrend and a downtrend, with the exact trading plan, and also how to trade the end of trend trades, the price to wave and the fill the gap, to cash out profits for those end of trend trades. And yes, we do move our stops after we've taken the first profit target. That's a question. That's a great question. You will learn the exact trading system I've used to successfully trade in both institutional and retail markets over the past 3 decades. So there's more than 30+ years of trading wisdom collected here. The price, I've invested tens of thousands of dollars in training over my career, and this training added to my experience. I could easily charge several $1,000s for this training. I had a student once that had spent $50K in training before taking the Wavy Tunnel Pro and told me this program is even more valuable. But I'm not going to charge even a fraction of that, not even $10,000 or $5,000. And this online program is equally valuable or more, so my students tell me. But it's more affordable. You can enroll today for one payment of $9.97. One payment of $9.97. What to do next? Click the purchase button, get your login info, and you get instant access to the Wavy Tunnel Pro Lite. And this is the website, wavytunnelpro.com/Lite. So if you want to remove uncertainty in your trading, if you want to get clarity about the future, crystal ball, and I'm serious about this. Neil runs our trading rooms, and Neil feels he has a crystal ball. He is a master in reading the market map, a master in really, he predicts where the market is going to move yet. So if you want to learn from Neil, if you want to learn from my team, then come join us. If you want to put in place a trading system that leads to massive confidence, because that's what we're all about, giving you the confidence to pull the trigger. And if you want to achieve consistent profits in your trading in less than 12 weeks, because that's how long it will take you to really go through the system and practice it and hopefully master it, at least one or two of the setups that you can start with right away, then the Wavy Tunnel Pro system is for you. Enroll now. And that's not all. We have a 5-week guarantee. You can learn the entire Wavy Tunnel Pro system. You can download everything, take the live classes, put it to work, make trades, even if they are in demo account, and make some money if trading live. Now, there's one caveat. I started the live classes. So all of the live classes are posted. I started the live classes in the middle of January. All of the live classes are posted in the website. So you get the course in the modules, you get the live classes, but I am starting a special mastermind when I get back from Australia, if I go, in the middle of April. So you will have 6 weeks to go through and learn everything, and then be prepared for our special mastermind in the middle of April, where I'm going to ask the students to show their trades and to explain their trades. We're going to have like working sessions on going through trades that our students have actually taken, and you can be a part of that. And if by the end of the guarantee period, the 5 weeks, you decide it's not for you, I'll give you a refund. But I'll ask you to give our system a fair try. Show me you did some work, that at least you took 5 trades, even if on demo, and that it didn't work for you, and I'll refund you. There's a premium bonus because it gets better still. You're going to get 2 months of the Wavy Tunnel Pro Desk membership. And that's where you have a trade scanner for Forex, stocks, commodities, and crypto, 4 London and New York trading and analysis rooms per week, trade with confidence videos with 2 to 4 actionable ideas every week, trade alerts with entry stops and profit targets, psychology podcast, which is priceless, and our automated trading system, which we released on February 1st. Just a few good trades, like the examples I just showed you, will pay for this entire program. The scanner. The scanner provides you with a pre-selection of trades in different markets and time frames. This is our assistant, one of the tools to semi-automate finding potential trades in the market. The 4 London New York trading rooms. The thing that helped me boost my confidence in taking trades was watching live analysis of the markets in the trading room. This is the place where you can really see how Wavy Tunnel Pro comes together. You can share your own ideas, speak to the people who are willing to help you. Once you learn the Wavy Tunnel Pro system, the reliability and accuracy is astonishing. That's from Marius. Trade with confidence videos. What is the track record, you may ask? Out of the 20 trade analysis videos, 19 of the trades analyzed were profitable. 1 of the trades wasn't triggered. There were no losses. That is the track record. Trade alerts. 74 years of experience. What do you get when you put 74 years of trading experience together on one team putting out Wavy Tunnel Pro trade alerts? You will also have access to our trades that we are taking live. Earn while you learn. Do you know what is better than my track record? How about 100% real results for the first 6 months of live trading Forex using the Wavy Tunnel Pro by a student from the 2019 group? Real trading results, the entries, exits, what was traded, size traded using the Wavy Tunnel Pro, 58.82% gain over 6 months. Documented. Automated trading tool, a surprise bonus for you. I hired a quant developer to develop an automated trading tool for my own trading. Meet Jeff, he is now our chief automated trading strategist, a new member of the team. And you're going to be in the first group of people to test drive this tool as part of your 2-month membership in the Wavy Tunnel Pro. Okay? So wavytunnelpro.com/light. What you get, recap. The Wavy Tunnel Pro Lite 2020 live program has 19 live instructional videos and Q&A sessions. And you have immediate access to the Wavy Tunnel Pro Lite, all of the modules, all of the course modules. These live sessions that I have done just bring the modules up to date with live examples. And I just give you more of my take on what's on the markets and how to use the strategy and the tools that we provide. What we haven't done yet was the Wavy Tunnel Pro Virtual Mastermind 8 sessions. So that's coming up in middle of April, like I said. If you join today, you will have 6 weeks to learn the strategies and participate in the virtual mastermind. You get 2 months free to the Wavy Tunnel Pro Desk and Scanner. It's $99 a month. And then premium concierge support, special reports, etc. So save and get priority access by enrolling now, one payment of $9.97 with the best guarantee ever, 5 weeks. And the discount ends soon. $9.97 is the best price ever. If you already know in advance that you want to order just to get the free access to bonuses and then refund, don't do it. It's not worth it. But if you want to give it an honest try, I'm more than happy to take you as my student to help you trade with confidence, make money, and I'll guarantee 100%. So if you've watched the entire masterclass, you want to remove uncertainty and doubt in your trading, you want clarity, you want to trade confident in your analysis and your trade plan, you know this is an excellent value. So take advantage of the amazing value, bonuses, and the best guarantee ever. Thank you so much for watching live. It was a real pleasure.